Yo, hey everyone, I hope you're doing good. Right, so just started tape reading right now. Yeah, though it's my first tape reading in a very long time, right? Because I've just been busy like that. So what we're doing right now is we're gonna first start with the calendar, Forex calendar. So you can see here 9 a.m. Right, the calendar is based on New York time. You can see here it's 2:43, right, Eastern time. So 9 a.m. there was news release, medium impact. 10 a.m. there was high impact news release. Then, yep, from there was no other news release. So let's just check the entire week. Right, NFP week. So when it comes to NFP weeks, the best 3 days to trade are Monday, Tuesday, and before AM session. Usually after AM session, price gets a lot of choppy, if not too much. Sometimes price will behave on Wednesday, but right. But the general rule is usually trade Monday, Tuesday, and Wednesday AM session, right? And if you want to trade the news, wait after the news is released on Friday. Don't trade during the NFP release. So you can see here, I'm looking at this level here, the 23.6 level. Right, some of your guys will be like, why are you not looking at the 25 level? You look at the 23 level. Alright, so that's a level that I actually found out about, right? So it's an important level, but it's fine. Let's just put a 0.25 level since you guys are more common with that, right? So we look at the 0.25 level. We're looking at this week. Alright, so look at this calendar. Wednesday, only news on AM, only news available at AM session. Thursday, only news available AM session. Friday, only news available at AM session NFP release. Right, so there's a lot of AM session news releases, whereas when it comes to the PM section, no, not much this week. So let's go to S&P 500. All right, S&P 500 is heading up. All right, we're looking at a range, and the range that we are currently looking at is from here to here. We can see our price respected this level, and now it's coming almost towards this level, right? So it's coming for this high, almost as if it's coming for this high, right? So we're looking at, right, just what I mentioned from here, from this high until the low. You can see price went above the 0.75 level. Right? It's just breaking above it slightly. You can put another level there. You can see 0.786 level. I'm also gonna be looking at that level, right? See how price reacts to that level. But this is internal range liquidity. This is external range liquidity. This is internal range liquidity because it's inside the range. Basically, that's why it's called internal range liquidity. So this is on the daily chart. All right, today we are Tuesday. This Monday price action. Today is Tuesday. It's this candle currently playing. All right, so let's go to the weekly. All right, let's see what the weekly is saying. So in terms of the weekly, price is already within this volume imbalance. All right, so I wouldn't advise anyone taking any buys at this level. All right, because mind you, the range that we took was from the daily, but on the weekly days is this is the range from here to this low. So let's mark, right? We're supposed to actually start from the weekly. Let's mark from there to this low. See, price has even reached a 0.75 level. The price is still very far, very far. It hasn't even reached the 0.6 level. So we're still looking at this level inside here. It's important. So let's leave this for the daily. Looking at this zone and see how price reacts inside here. So we always start from the higher time frame. Right, so that's the S&P 500. This is the Nasdaq. So in terms of the Nasdaq, we're looking at this week and we're looking at this week. Why? look here. You see there's a small gap. Price did not touch the high, or should I say the low. The high did not touch the low of this week. Left a small gap. So this week, right, formed an institutional order flow entry drill and a breakaway gap. I need to get a new laptop. Therefore, this week is an important week. Right, so we're looking at the level of this week. Right, the levels of this week. Alright, you can see closer up. You can see there's a small gap in between here. And then price went and took liquidity, sell side liquidity. Right, we're not gonna mark all the ranges here. We're gonna take out this one. We're gonna take out this one. We're gonna take out this one. So we're not gonna look at these levels. These are the three levels that we are gonna look at. At this level, and then we're looking at this week as well. Just the one below. Alright, we're looking at this week as well. Doesn't hold much importance, but does play a small role. Alright, so look at between these two. We're gonna put this in here. We're gonna take out the 0.25 level because we don't need it at the moment. Okay, so now we've done the weekly on Nasdaq. Mind you, it's already PM last hour already started. That's what's always important for you to start early. But mind you, I just came from teaching a person, so I missed it so much. I was like, no, I just need to do it. I need to do it. Like, I'm so sorry, guys. I was like, I just need to do it. So we're looking at this week and we're looking at this high. Then we are looking at this level, right? So this one here is what price does is determined by what price does here as well as here. Because mind you, I marked these levels. Alright, let's take this out. This was just to illustrate here or something. I didn't mark this level, right? This is an inversion fair value gap. I didn't mark this level, it's an inversion fair value gap. I didn't mark from here to here. It's an inversion fair value gap. So I could have marked that instead of this week. But I'm using this week and this week, right? Because it's in close proximity to that. And it's the nearest one. So here, this is an inversion fair value gap. Let me explain what I mean so you guys can see, right? Everything I'm putting on the charts, you can see that it's the high, you can see that's the low. Let's make this another color for this orange. All right, let's put this orange. Yeah, imagine I came from work, I went to teach someone it now so much. Let me at least do a one live tape read. And then let's mark this as minus inversion fair value gap on the weekly charts. All right, let's put that there. Oh yeah, I'm gonna get my live account very soon, just so you guys keep waiting. I'm even gonna start paying for TradingView. You can see this is delayed by 5 seconds. I'll start paying and it won't be delayed, trust me. It's gonna be lit. But let me first get everything sorted. So we're done with the weekly. Let's go to the daily. All right, you can see prices in the weekly level. So in terms of the daily, we're looking here. Once price goes range, but I'm not gonna mark it because it's not salient, or should I say important at the current moment, because we're not gonna take any trade that will need those levels at the moment, right? Mind you, I marked these levels from the daily and from the weekly. So if you look at it, right, you're gonna see different weeks. You see that week is from the weekly, and then there's another week. Let's delete that one. Then there's this week from the daily. Price is behaving here, so we just use this week, which is also in this CB. See how price reacted to 0.25 level. Perfect, right? Then S&P 500. Let's delete this. Right, that was just for reference. This is a weekly volume imbalance. Right, you're gonna get used to the terms, so don't think about it too much. Weekly volume imbalance. There's a liquidity void and then there's a volume imbalance. This is a volume imbalance. Hopefully you guys can hear what I'm saying. Imagine all the time I'm talking to myself. That would be very sad for you guys, of course. For me, nah, I'm chill. So you can see Monday price action, Tuesday price action. Price covered this whole range, this whole daily range. So imagine from last week Friday, price has not broken this range entirely. This is the first instance that it went above this range. First instance, right? First instance that it went above this range. You can see. But if you take this and you put it to that low, you'll notice that it's still in the range. Right, so this is a daily. Call this daily. I just love doing this. I'm not gonna lie to you. I'm so exhausted right now, but I'm doing it, and it doesn't feel like work at all. Crazy. Daily CB. And then, right, be looking at this week. So mind you, 5 minutes has gone. So the 350, 250 to, right, there's a macro that occurs. It's 250, right, PM to 310, right, PM, right. So 5 minutes before that macro is finished. Don't worry, we touch on macros. We're still on the higher time frame. Let's go to the 4 hour. Okay, we're on the 4 hour now. The levels from the daily disappeared all of a sudden. Current interval and below. Alright, 4 hour. Guys, you mustn't trade everything. You must be picky with what you want to trade. You can't be trading all of the indices now. Come on, you're not gonna grow. As a trader, you should decide, okay, I'm gonna trade this, I'm gonna trade that, I'm gonna trade this and that. And you can see I'm only showing you all three. I'm not showing you all any more than three. Because these are the three I usually trade. Of course, the others are just do analysis on them, but I don't trade them. So as a trader, you should pick a few, not all of them. You shouldn't trade all of them, or else you won't master anything. You know what they say: a jack of many trades, a master of none. That's how the saying goes: a jack of many trades, a master of none. Yeah, so you need to master. If you choose one, that's even better. If you choose three, that's perfect. That's not a problem. The reason I chose these three is because they move alike, but they do have the instances where one will do something else and then the other will do something else. But most of the time they move alike. You can see how price is reacting to this weekly high, weekly volume imbalance high. Right here. Wouldn't be very wise to take a buy here or sell. It's so much a sell or buy. This price could do a sweep up and then go back in. Sell will be more doable, assuming this is the high of the day. Because the high of the day forms between 3 and 4 p.m. Alright, so we're done with the 4 hour. There's not much to do, guys. Let's go to the 1 hour. So this is where the trading is about to start. Alright, so let's go. Where's the day? The day starts here. Alright. You guys see that? That's the day. The day starts here. Let's see what happened yesterday. Yesterday, this is what happened. Price came, took the slow. Pop, 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 pop. Tuesday, price took that high. Alright. Okay, now it's just on top day. This is for S&P 500. And then for Nasdaq, let's see what happened yesterday. Same thing. Told you guys they move alike. Same thing. See the same thing happen also. Price came, took the low here, went up, took this high here, and today Tuesday started by going down, went into this level, then came at 1 p.m. around 1. Should I say around 1? Not 1 p.m. Around 1. So it came in here. Right. You can see price behaved itself. She behaved herself. This one here was more upwards. You can see. Just okay, so let's see. Same thing. But this one here was, you can see the way it's moving, that this one here is the stronger one, because it's just been moving up. So you must be cautious selling here, very cautious. That's how I determine where not to sell, where to avoid sells. Maybe tomorrow it might be the weaker one, but right now it's the stronger one. Just look, and it's just been going up. Look here, right? It's weak below here, but did not close below here. It's just carried on. Look here, alright. This is how. Look at this one. See, 9, right? Look at this time, 9. Look at the time here, 9, right? These things you should notice like quickly. Look at this 9. Look at this 9 candle. It closed up here. Look at this body. This body is higher than that. It's part of a SMT divergence. Where this one here confirms to you that the other two are just going down to enter into a key level. And the key level is this. I told you guys a lot. And here the key level is this. There's it right here. Okay, the macro is finished. Remember the macro I told you? Alright, it's finished. Here, there's the key level. See? Perfect, right? Okay, 15 minutes. Let's look at the 15 minutes. Let's see what price is doing. You can see price is not breaking above the swing. Right? The swing is holding price. You could take a sell here, but it's always important for you to know what did the swing take a high? Did it take a low? Okay, didn't take a high, didn't take any high. Right. So in this case, you see how the swing took the low, right? And then came, then it broke this. Then came, it didn't break this. It respected this and then it came here and then came here. You could have taken a buy here using this. I don't want to mention that. I'll start confusing you guys because you won't be able to identify them. But look here, right? Let's take a demo trade, right? Let's take a demo trade. We're gonna go on the 1 minute, don't worry. Connect. We're gonna go on the 1 minute. $961 minus 38.60. I think you guys saw the when I started this account history. You can see, yeah, $42. These are all commission. The charges for closing and entering trades. Then I lost. Now I'm down $38, right? You can see, yeah, this you can see the asset I took a trade on. There's the asset. Just look here. S&P 500, S&P 500, S&P 500, S&P 500. Look at US 30. You can see US 30 made me lose a lot of money. US 30. 1 unit. S&P 500, I used 3 units and I still lost less. 3 units. There's it, 3 units. And I lost less. S&P, look here. I used 8 units and look how much I made. Not a lot. Here I just used 1 unit. Look how much I lost. I don't play with US 30. So in this situation, I wouldn't advise anyone to trade in the situation because price has already moved a lot. A lot. Like look, a lot. Like where are you trading to? What are you buying for? Where are you selling to? It makes no sense. Why would you even want to trade in at a point like this? Why? 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 It makes no sense. So in those cases, I would usually just close my charts, carry on my day, do whatever I was doing next. But I'll show you alright what happens if you trade in these conditions. Let's go to the 5 minutes. Let's say you're looking and you're like, okay, me, I am a master. Me, I can trade. Sometimes pride makes you do a lot of things. That's why you need to humble yourself. Let's say you're a master, right? You're like, hey, me, this market can't do nothing to me. Me, I've been experienced for many years. Me, I have all the skills. Okay, let me show you what will happen with all your skills, alright? Because guys, mind you, I've been doing this for a very long time, and I still humble myself. So I know, okay, don't trade here, please. You're gonna put feces in your. I don't wanna say it in a wrong way. What I'm basically trying to say, you're gonna. The Holy Spirit doesn't want me to say it in that way. You're gonna waste in your pants. That sounds better. You're gonna waste in your pants. Why take a trade like this and waste in your pants? Now I mean, better save your money. Look what price is doing right now. You see this level at the 0.25. Let's see you are a genius. You are like, me I can trade this. 10, don't use 10. You're using one, right? Let's take this out. Use one. Pa, alright? You know how to trade. Come on, you've been doing this for a very long time, right? Like, I'm gonna take this trade here. I'm a top trader. Put my stop loss there. Whew, look at your stop loss. God, that's nothing. Let me 1 to 2, right? You always aim for a 1 to 2 minimum, right? 50. If you're risking $50, aim for 100 or $110, or try and cover commission, right? So 100 and but also account for where price could stop, right? So look here. You can see price. So you wanna put the stop loss thing 45, and I aim for that, right? I'm so hoping this trade doesn't go according to plan, so I can make my point to you guys. If it goes according to plan, you're not good. If it goes according to how y'all want it to go and it actually succeeds, you're not gonna get the points I'm trying to make. You're gonna end up trading in scenarios like this. So I am hoping it hits stop loss so I can make my points to you guys. Look here. Right, look at this. Where are you trading to here? Let's be honest. Look at the range. Look at this high. Look at this low. This is the range price is in at the moment. How much will you make in this range? Where will your stop loss be? Where will your take profit be? Look, it makes no sense, right? Price is obeying me. Let's go hit stop loss. Come on. It's annoying when you try to make a point and then I've done this before. I tried to make a point for someone not to trade at a specific scenario, and then price goes and hit my stop loss, so I don't end up making my point. But it should make my point, right? Because should hold price because it hasn't taken up this high. This high has been holding, but mind you, it's also at the 0.25 level. Look at this range, right? You took your trade, right? Let me show you the thing, trade settings. All right, I want you guys to see execution. Boom, this is where the trade entered, right? you took your trade here. You put your stop loss here. Your trade is on. I took it on 5 minutes because 5 minutes is where you should start as a beginner. You shouldn't go on the 1 minute. If you're a beginner, stay on the 5 minutes. Look, you took your trade here. Your stop loss is right here. What makes you think price won't come for this high? Hmm? It was gonna be a wiser sell had price taken this high first, calm down. Let's say when price takes this high, it forms a breakaway gap. I'll show you. This is a breakaway gap. See this gap here where it's empty. That's a breakaway gap, and then price carried on. So it would be better if price came, took this high, formed a breakaway gap, went to the 0.38 level, right? Formed another breakaway gap, and then maybe let's say it consolidates, comes down maybe below the 0.38 level, then goes, takes that high, forms a fair value gap, breaks that fair value gap, breaks the low below the 0.38 level, and then retraces back to a fair value gap formed there. That would have been a better sell. But you're taking a sell here because price is at the 0.25 level. And mind you, just entered this trade. As soon as you enter this trade, you're already in a loss. There's it right here. Look at the time. 2. You can see the time. Look at the date, 29. The trade was entered at 9:20, 9:15, 9:15. See, let's go back up. Look, they're all consolidating. And these are the, yeah, price, let's assume price does hit your TP, right? The problem with that is it's first gonna frustrate you before it hits your TP because price moves so slow. It will move so slow, you're gonna get frustrated. And I wouldn't want my student to put himself in a situation like this at all. I wouldn't want my student to trade in conditions like this, and then at the back of his mind, what's going on is, hey man, hey, trading must be hard. Like, yo, no. I want my students to trade scenarios like this. You see, like how this just moved beautifully. See how beautiful this moved, right? Oh, AM session. Look from here, right? 10 to 11. This is the type of trade I want my student to take. You see this one? Beautiful. Just take. And the thing is, I already know how this works. You see how price took this high, right? To usually move after 10:30. It's like that. I've seen this thing play out so many times. Look, see, 10:30 then it starts moving. Why? Because the 950 macro took out a high, so it comes down. Oh, I'm sharing a lot of secrets. So it comes down, and then it starts moving from 10:30 to carry on to take that high. See, it took that high. See that? 1050 comes, 1050 starts retracing, goes into here, and boom, it takes the other high, the one that was formed, this one. Perfect, right? Wonderful. Is it not amazing what price can do? And after it takes that high, it aims for the high of the weekly favor volume imbalance. Look, tell me guys, who's gonna sit here and watch this? Look, would you sit here and watch this? Look at your trade that you took. Yo, you are depressed. At this moment, you are depressed. You're already sweating. Fear is grasping you by your throat. At this point, fear is strangling you. You looking here. I'm sure you're looking here. You're like, yo, hi, $12. Yo, let me cut the trade. No, relax. You wasn't supposed to enter the trade at all. So this is, I wanted to stay tape but like I said earlier on, I wouldn't trade before I even took this trade. I'll tell you guys I wouldn't trade in conditions like this because prices already extended for a long time. Mind you, price already took the low of the day and then went for the high of the day. Usually after price does that, it doesn't move a lot because it took the low and the high of the day. And it happened on all three of them. Look here. It took the low of the day and then went and took the high of the day as well. So when price does that, like this is something I'm teaching you. When price does that, it usually won't move a lot after during the PM session to consolidate. Yeah, it can move in the first session, right? Maybe from 2 to 3 p.m. But then from 3 p.m. to 4 p.m. it will just consolidate. Yeah, it's a habit the price does. And it's something I've learned because I've seen it so many times. It's like, now let's look. I was actually supposed to be doing product study because I want to learn how I can pitch the fast to get more fasters on my sale because I made a sale today and I didn't pitch my fast. So I actually wanted to do some studying on how to pitch the fast. Hey, bro, I didn't want to move the stop loss. I wanted to move this. Do you guys know where I put my stop loss? I'll show you where I put it. I put my stop loss above this high. Let me show you. I'm gonna mark it down now. Or should I say at the high? Yeah, at the high. Yeah. First shouldn't come above this high. Cause look, alright? So it attempted the first time to close above it, then couldn't succeed. Came attempted the second time, it couldn't succeed. It closed below it. Attempted the third time, it couldn't. It came right and closed below it, and didn't only close below it. Plus, it's a swing high. They only closed below it, but the other candles just came going down, and it's also closed below this candle. So I wouldn't want price to come above here. That's why you see my stop loss is there, right? Yeah, stop loss at the right place, but are the trading conditions good? Wouldn't say so. So let's go on the 1 minute because on the 5 minute looks very boring. Yeah, let's do some 1 minute price action. I'm gonna stay here for a while. Alright. I'm gonna do some predicting here. Right, so I want a breakaway gap to form here. A breakaway gap is a gap that remains open. You see this high, you see this low. I want this level to remain open. So I'm telling you all before it happens. I want this level to remain open, or a portion of it to remain open. I'll call it breakaway gap. Back. Right. Yeah. I want a bag here. Price can come, but I want a bag. Even if price comes, I don't mind. But I want a small portion to remain open. That will be called a breakaway gap. And you see this low, yeah? This is 1 minute mastery. See how price went below there, right? If I was here on the 1 minute, I would have wanted price to, but look what it did. It tweaked and then came and closed here. That's not something you'd want. So now what I want, we're looking at this low here, right? Because this low is also a significant low. You can see price has been failing to close below that. Price is respecting this week. Now let me show y'all. I'm gonna mark only a few levels. Let's take this